As we all know, the COVID-19 pandemic has had a significant impact on the global economy, but things are finally starting to look up. China's economy is set to rebound this year as mobility and activity pick up after the lifting of pandemic restrictions, providing a boost to the global economy. According to the latest projections, China's economy is expected to expand by 5.2% this year, compared to 3% last year. That's great news for China and the world, as the Chinese economy is now expected to contribute a third of global growth this year. However, China still faces some significant economic challenges. The contraction in real estate remains a major headwind, and there is still some uncertainty around the evolution of the virus. In the longer term, headwinds to growth include a shrinking population and slowing productivity growth. If all the predictions of a downward slope in China's economic chart are correct, what would happen, and how would it affect the rest of the world? China's role in the world economy. China's economic growth has been nothing short of phenomenal, and it has managed to pull itself out of poverty in the last 4 decades to become the second largest economy in the world, with a GDP of around $16.5 trillion as of 2021. So how did China manage to achieve such impressive growth? There are several policies that have contributed to this, but let's look at some of the most important ones. First is the Reform and Opening Up policy, which was implemented in 1978 with the aim of modernizing the economy and attracting foreign investment. This policy allowed for more private enterprise and foreign investment, leading to an increase in economic growth. Another crucial policy was the export-oriented policies, which have helped China become the world's largest exporter by focusing on manufacturing and low-cost production. The Chinese government provided incentives for foreign companies to set up factories in China, leading to job creation and economic growth. China has also invested heavily in infrastructure development, including building new highways, airports, and high-speed railways. This has improved transportation and connectivity, making it easier for businesses to operate in China. China's economic growth has not only benefited the country itself, but also the rest of the world. For instance, China's position as the world's largest exporter has increased global trade and created jobs in other countries that import goods from China. Furthermore, China's economic growth has also helped reduce global poverty. The World Bank estimates that China's poverty rate has fallen from 88% in 1981 to less than 1% in 2021. This is an incredible achievement and a testament to China's commitment to economic growth and development. China has also been investing heavily in renewable energy, such as wind and solar power, to reduce greenhouse gas emissions and combat climate change. This has a significant impact on the environment and the world. China and Africa. China's relationship with Africa dates back to the 1950s, when China began providing support to African liberation movements. However, it wasn't until the early 2000s that China's engagement with Africa began to grow significantly. In 2000, the Forum on China-Africa Cooperation, FOCAC, was established to facilitate diplomatic and economic relations between China and African countries. One of the key areas of China's engagement with Africa has been infrastructure development. One example of this is the construction of the Mombasa-Nairobi Standard Gauge Railway in Kenya, which was completed in 2017 at a cost of $3.2 billion. This railway connects the Kenyan capital of Nairobi to the port city of Mombasa and is seen as a major development project for the country. Another example of China's investment in African infrastructure is the construction of the Addis Ababa-Djibouti Railway, which was completed in 2016 at a cost of $4 billion. This railway connects Ethiopia's capital city of Addis Ababa to the port city of Djibouti and is seen as a major development project for both Ethiopia and Djibouti. China has also been providing aid to African countries. In 2015, China pledged $60 billion in aid and loans to African countries over the next 3 years. This aid has been used for a variety of projects, including building hospitals and schools and providing agricultural assistance. However, China's relationship with Africa is not without controversy. Some critics have accused China in engaging in debt trap diplomacy, where China provides loans to African countries that they are unable to repay, leading to China taking control of the key assets. For example, in 2017, Sri Lanka handed over control of the port of Hambantota to China on a 99-year lease after being unable to repay the loans it had taken from China. China's economic challenges. For the past couple of decades, China has experienced an unprecedented economic growth rate, fueled largely by exports and infrastructure projects. However, with changes in the global economic climate and the slowing of China's economy, there are now several challenges that China must overcome to maintain its economic prowess. One of the biggest challenges is transitioning from an export-driven economy to a consumption-driven one. China's economic miracle was largely fueled by the United States' consumption of its goods, accounting for over a third of Chinese exports. However, with rising interest rates and a slowing economy, Chinese businesses must now focus on selling to each other to sustain their growth. Another challenge facing China is its falling growth rate. The government's ambitious infrastructure projects have caused a lot of debt, and with negative market sentiment, more debt cannot be added. The growth rate has already dropped to 6.5%, causing investor panic and fears that it could dip even further if China cannot find cheaper sources of funds to fuel its growth ambitions. Falling GDP also means falling tax revenues for the Chinese government, creating shortfalls that need to be filled by borrowing money. But given the debt trap that China may soon find itself in, borrowing is not a viable option. China will have to figure out other ways to collect more tax or cut spending, causing the GDP to go into freefall. Another challenge is regional imbalances, with the economic boom leading to widespread development on China's coastal periphery. However, interior China is still a third-world country with low standards of living, and sustaining high growth rates with poor infrastructure will be difficult. Developing the internal areas will help boost Chinese GDP, but will require significant investment. The government's central planning has also led to a lot of malinvestments, particularly in the manufacturing sector, causing non-performing assets that could cause mayhem in the Chinese banking sector. The spillover effects of this downturn could be felt in the stock markets as well as across the world. What happens if China's economy fails? First, let's look at the possible impact on China itself. If the Chinese economy were to fail, it could trigger a major financial crisis that would have significant consequences for the country's citizens. For example, if China's property market were to crash, it could lead to a wave of defaults by property developers and banks, resulting in mass unemployment and social unrest. Moving beyond China, the biggest countries that may have the most to lose if China's economy fails are those that have close economic ties to China. One of the most significant examples is the United States. In 2020, the U.S. imported $451 billion worth of goods from China, making it the largest importer of Chinese goods in the world. A collapse of the Chinese economy could lead to a disruption in global supply chains, causing shortages of goods in the U.S. and elsewhere. Moreover, it could also lead to a major devaluation of the Chinese currency, which would make U.S. exports more expensive and less competitive in global markets. Another country that would be affected by a Chinese economic collapse is Australia. The two countries have a close economic relationship, with Australian commodities such as iron ore, coal, and natural gas being in high demand in China. If the Chinese economy were to falter, it could lead to a decline in demand for these commodities, leading to job losses and a slowdown in the Australian economy. African countries that are heavily dependent on trade with China could see their economies suffer. The demand for African commodities like oil, copper, and iron ore could decrease, leading to lower prices and reduced export revenues. In addition, Chinese investment in infrastructure projects could slow or even stop, leading to a decline in economic activity and a reduction in job opportunities. On the other hand, there are also countries that may stand to gain if China's economy fails. One example is India, which has been looking to diversify its manufacturing base and reduce its reliance on Chinese imports. A decline in Chinese manufacturing could create opportunities for India to attract more foreign investment and expand its own manufacturing sector. A collapse of China's economy would have far-reaching consequences not just for China but for the rest of the world. With China being the world's second-largest economy, the global economic and political landscape would be significantly impacted and potentially destabilized. But do you think there's a possibility of Chinese economic collapse in the foreseeable future? Or do you think these are mere projections? Drop your thoughts in the comment box below. And don't forget to like, share, and subscribe to the channel. Until next time.